Hey guys, we are just about to get started here, and um, uh, this webinar is how to make profits with 0DTE credit spreads, SPX credit spreads. And so hopefully you're in the right place, and we'll get started here and let everyone get in here. Okay? All right. Okay, all right, guys. My name is Alisada, and I am going to share with you 0DTE SPX credit spreads, and hopefully this is going to be of value to you. I've been doing this for over 5 years, trading SPX credit spreads from, like, let me see, we had the Facebook group, yeah. And I pretty much started with 0DTE, and it was because someone in the group, shared that, that strategy, and I started looking at it quite a bit. And long story short, it's probably one of the most best performing trade that I have done over the years. And so this is a great time for you to understand and look at this strategy, and I'm going to share with you all of it basically, and hopefully you can walk away with a strategy that you can use going forward. Okay, all right, so here we go. So what can you expect? I'm going to be showing you how you can make consistent returns monthly based on margin capital at risk using SPX 0DTE high probability trades. Okay, and what is it that you're going to learn? I have 6 things here. Okay, number 1, how I went from taking 0DTE 3x losses, and 3x means that, when you put on a credit spread, you're actually taking money from the market and using that to place those trades, and so you're selling before you buy. Okay, and we'll talk more about that. How to identify strikes and strike prices that you'll use to increase your profitability. Number 3, how best to mitigate a trade that is threatened, and I have a pretty long section in here to talk about that, okay, because it's really, really important to understand how to manage credit spreads. Capital requirements to manage in the money and out of the money credit spreads. The best time to widen spreads to gain an edge on the position. Oops. Can you see? Are you guys not seeing the screen? I just want to make sure. Any takers out there? Can you guys hear and see what I'm sharing? Yes. Okay. Okay, perfect. Thanks, guys. All right, if you can't, go ahead and rejoin, and I think you should be able to get in. If not, I do have a replay, okay, and we'll be sharing that replay probably tomorrow. Okay. All right, so the 6th part is detailed entry, and what I'm going to share with you is detailed entry, exit, and stop loss criteria to maintain consistency. All right? Perfect. Alrighty. Okay, so stay with me till the end, okay? We have a special bonus for you guys, and I guarantee you'll like it. One other thing is just stay with me, and I will be sharing all the information that I possibly can, And if you if you stick with me here, I will answer all of your questions, okay, for sure. And you can just put them up there, and I'll go back and review those and answer your questions. All right, promise to do that. Okay, so I put together a few reasons why I might think that you're here. All right, number one is you're interested in learning new strategies that it'll take your trading performance to the next level, so you can finally leave that 9-to-5 career behind. You've seen, heard about, read about, and others making money on trading, and you know that you can do it too. You're just not seeing your account grow fast enough. And number three, you've tried different trading strategies that you thought, okay, this is it, only to discover that it's just not getting you to the place of consistent results, right? So 1, 2, and 3. 1, interested in learning how to new strategies, and just give me your hand to share, all right, to let me know which one it is. Number 2, desire to see your account grow month after month. And number 3, find the right strategy that provides consistent trading results, right? So which one of these? 3, okay, 3, great. All 3? Yep, 3, perfect. All? Okay. All right, I think we're in the same place here. Okay, perfect. All right, so I just want to let you know that I'm a regular guy. Here's my family on the left, and my parents on the right. Long time ago, MBA program. So just a normal guy that wanted to trade for a living. I was in the tech business for many years, and I was always trading, and finally got a break towards the end of my career, and it's been great. Okay, and if I can do it, you can do it too, guys. All right. So let's imagine first. Okay, so I want to start with a mindset, because it's really important. So imagine if you would feel like if most of your trades were winners month after month, and it would be confirmed by watching the size of your account grow. Okay, becoming the trader that no longer takes large losses but consistently trades according to proven trade plan that is profitable over time, allowing you to grow your account month over month. And that's really the goal here, right? Really the goal to achieve success in a trading strategy that's consistent, and that's the goal. Okay. All right. So before we get into the real meat and potatoes here, let's talk about what a credit spread is. Okay. So some of you may not know what it is, right? So a credit spread is a combination of 2 puts and 2 calls, where the put and call that is sold is more expensive than the put and call that is bought. And when you're always putting on a credit spread, you're selling a position and then you buy it back. Basically, that's how it works. And so you can see here that we have a position that's 40-50, 40-40, okay? And your premium is 50, and you multiply that by 100, and that gives you $50. And so that's what a credit spread is. You're taking that premium in. And if the position stays within a range, you keep that money, and that's how it works. Okay. All right. So we're actually selling the 40-50 put and buying the 40-40 put, and that's what gives you the credit into your account. And this trade is considered to be a high probability trade. All right. So let's look at how SPX options decay. All right, and so this is a chart of a 68-day move in the market. Okay, so what happens is every time you put on a if you place a option trade, and it's a long option trade, you're always going to be fighting against decay. All right, and so this is how decay works. So from 68 days to 33 days, the rate of decay is 34%. The rate of decay from 33 days to 5 days is 57%. And from 5 days to expiration, the rate of decay is 100%. Okay, and so you can see here that when you sell options, it's helping you. Okay, the decay is actually helping you to become profitable. Okay, so let's talk about the profitability factors. There's three. One is implied volatility. Now, when I put on a 0DTE trade, I put on that trade right at the beginning of the session, the 9:30 session. Okay, and the normal session is from 9:30 to 4 o'clock. Okay. The implied volatility typically or mostly is at that 5 to 10 minute area. Okay, so the volatility is really high during that period of time, and then normally it goes down over the session. Okay, until sometimes it happens towards the end of the day you might get a spike, but normally the positions stay pretty solidly down, okay, in terms of implied volatility, and that's what you want to leverage. Okay, you want to leverage that because that's the highest volatility, and volatility works in your favor along with decay. Okay, all right. So profitability number 2 is theta, which is basically what we talked about. So during the time of that session, the rate of decline in the value of that option is moving down. Okay, just automatically. Now, if you get a spike up, let's say, or down, yeah, it's gonna increase again. But the probability of making a profit here is very, very high. Okay, all right. So and this is a big factor in terms of 3 to 7 days trading. Okay, and that's why I trade both of these positions, both of these types of positions. Okay, and then the third profitability factor is the market direction. So if you have, let's say, a market that's going straight up during the whole session, well, you're going to get threatened. Okay, that trade is going to get threatened. And however, if you're let's say the market's going up and you put on a put spread, that put spread is going to probably expire worthless. Okay, if the market's going up. Now, if there's a call option that you've sold and the market's going up, well, that position is getting threatened, as I mentioned. Okay, and that's how it works. Okay, and again, so as long as the position is within an acceptable range, so and for example, today, I put on a call spread. It was 56.10, 56.20, and I received a premium of 55, and then I also put on a 55.50, 55.40 put at 55 as well. Okay. And I can tell you right now, both of the range right now in the market is pretty steady, and it's almost to the point where you can close that trade. Okay, it's all at this point it's actually profitable. Okay, so let's talk about risk management guidelines and daily routines. Okay, that I follow. Okay, so I always trade with a plan. Number 1, determine where the max loss and max reward is for entering a trade. Trade no more than 20% of your trading capital, right? And the reason for that is because with credit spreads, sometimes you need to widen spreads, you need to adjust trades, okay? And so you need that cushion to be able to manage these trades. And really adjusting trades for credit spreads is one of the most important things that you can do. Don't allow more than 2% loss trade based on capital at risk. For 0DTE, I can tell you that with a $30,000 account, okay, and placing basically 4 contracts 10 wide, right? That's really the sweet spot for getting an edge here on these trades, right? You can have a stop loss, and we'll talk about that again, as I mentioned. Okay, you can have a stop loss and still, take the loss, move on to the next day, to the next day, to the next day, and you will be profitable. And I will show you the actual profits, for what I've been doing recently, to show you that this is a real thing. It works. Okay. So for highly trading markets, position your trades to follow the trend. In other words, if you have a market that's actually moving higher all the time, the best way to place that trade is to put on a put spread. Okay. Because generally put spreads get further from the market and against call spreads, which are always closer to the market, and then and that way, basically, it's a cushion for you to be able to trade these. However, I trade both sides pretty much every day, and we still come out ahead. And yes, a lot of times we do get threatened on the call side, but if you have a tight stop loss, you're gonna be fine. Okay. Size your trades to ensure that emotions are not part of the decision-making process. And this is one of the biggest things where traders, that haven't been trading so long, they want to get in, they want to make money really fast, but you really need to do what you really need to do is get experience. Okay, get in there, get small, and I always say trade small, trade often. Get in there, get your experience, and learn, how to manage the emotions that come along with it. And and if you do that, for 2 to 3 months before you get bigger in your trading, you're gonna find out that it's very, very helpful to do that. Okay. All right. So pre-market routine: review areas of support and resistance. Understand what the dollar does, okay, for SPX, and what Treasury notes do as well. And review futures trending direction. So with SPX, the market opens at 9:30 and closes at 4. With ES futures, which is a derivative of SPX, trades basically every single day except for Sunday, or Saturday and Sunday. So so you can see there the trend where the market's going very clearly. Look at the VIX level, which is a factor of volatility, and where that is. And so when you put on a 0DTE trade and volatility is low, those positions are going to be much closer to the market. If the volatility is much higher, let's say in a VIX that's 20, those positions are way way higher, way lower. Okay, but it's just how the market works, and that's how it works. Okay, and determine credit positions before you go into the market. That way you'll have an understanding of what positions you're gonna put on. And you can put them on very, very quickly. So here's a diagram of potential trades. So these are previous trades, and then you have a bear spreads, and then bull spreads, and basically, and then a iron condor. If you want to put that on at the same time. Okay, and so that's how it kind of works there. So you see the previous trades, then you see the potential trades for bear spread and bull spread, and then you can look at the iron condor. Okay. All right. Post-market routine: determine if rules were broken and why. Determine if the risk within risk that you have was acceptable. Also determine if losses were within acceptable ranges. And this is a good way to look at this and journal your trade, so you understand what you did wrong, what you did right, and then at times you need to tweak your trade plan as well. Everybody's different in how they trade, and you need to figure out the right way, and the most easily way that you can trade based on your certain type of trading. Okay, and that's really important. So we all have different types of trading, and eventually, as you get experience, you'll adapt to that. Okay. All right. So let's get into the nuts and bolts here of this. And first, before we go into it, let's talk about pattern day trading. So with 0DTE and an SPX, there's a FINRA regulation that you can't trade more than 3 positions within a 5-day period. Okay. In other words, if you day trade 3 times in a 5-day period, you can get restricted on the 4th time, and they can close your account down. Okay, so that's really, really important to understand. And like with Tasty Trade, they have a day trade counter, and it shows you how many positions that you've had during that period of time. If you're above $25,000, you're fine. It's you can trade above 25,000 without any restriction at all. Okay, so if you don't have a $25,000 account, right, there's different ways that you can manage that. So you can limit trades to 1 trade every 3 days a week. Okay, manage trades from multiple accounts. You can trade iron condors that are wider, and trading with a cash account, you can't do that with spreads, but you can also trade options on futures, which don't have any PDT restrictions, and basically trade very similarly to SPX. Okay. All right. So I'm not seeing any questions out down there, which is really good. And hopefully we'll get to some of them here. Okay. So let's talk about entry. So I enter with within 1 to 10 minutes of the trade, and I typically actually do it between 1 and 5 minutes most of the time. Okay, sometimes I'm trying to get in a position and it goes a little bit further, but most of the time I trade with 10 wide positions, and I do it within about 5 minutes. Okay, and I'll show you examples of these trades recently. Okay, so I use a delta between 5 and 6. Sometimes it goes a little bit higher on that, and the premium is between 45 and 70, and I generally get between 50. I really don't put on 45. Between 50 and 70, and sometimes we get in at 75, depending on what the market is doing there. Wider spreads provide greater distance, and we'll talk about that in a few minutes here. And it gives you less risk. However, if you require additional margin, it's greater risk, basically. Okay, so wider spreads give you more time, or more time in the market, or distance from the market. And what I've found is trading 10 wide is really the best way to go, in my experience. Okay, so you can take profit, especially if you have a $25,000 account. You can take profit at 10 cents, and that trade typically will go to 10 cents around 1 o'clock in the afternoon. Okay, so you put it on at 9:30. And if the market is steady, right, you can probably take off that trade at 10 cents, depending on where you put it on. Now, closing the trade, there's a couple of different ways to do that. You can close the short strike, or just let the position close, okay, on expiration. And so in our group here, we most of the time we use expiration on these, and it works out pretty well. Okay, and also don't allow a profitable trade to turn into an unprofitable trade. That's not good. Okay, so adjusting a roll. When I roll a position, you want to do it within 10 to 20 points, or I'm sorry, 5 to 10 points when a threatened trade. And to close a bear spread, I typically use use the premium that reaches 2x or 3x. So as an example here, right? So if you put on a let's say you put on a bear or bull spread, right? And the position's at 50, so you collected $50, right, on that spread. If the margin, or if the premium goes above 2x or 3x, that's where you want to close the trade. Now, what I do is I roll bull spreads, and I close bear spreads, okay? And that's really the safest way to go. Now, sometimes I take it a little further and let the market go sometimes. And then I'll get in there and then manage that trade, even if it's above, even if it's threatened above the the strikes, the short strike. And so I wouldn't recommend that, especially doing it new. Just if you keep this discipline, 2x or 3x, you'll still make money. Over time, I guarantee you, okay? It'll work. All right. So let's talk about managing SPX trades, okay? So this is where you really want to understand and pay attention, okay? Because I've done a lot of research on managing in the money, out of the money trades, and it's very valuable to understand. Okay, all right. So first of all, this is a 22 VIX. Okay, when I put this on, and you can see here on the 5 wide, it gives you 1.2%. Okay, and that's if you're looking at it like today, because the market's at like close to 13 on the VIX. Okay, it's much closer right now, as it would be for 22 VIX. It's a lot higher. Okay, so this is 1.2%. With the spread on 10, okay, you can see it's quite a bit further away from the market. Okay, it's almost 2%. And so and then once you get to 15, 20, it's kind of a diminishing return, and that's what happens because it's just not worth it. Okay, it's not worth the width when you do that. Another point is if you trade 5 wide and you widen the spread to be able to move the position much further away. Okay, so trading 5 wide, the benefit of that is being able to widen the spread, and you can really widen that spread to get it way further from the market. Okay, so that's one of the benefits of trading 5 wide. Okay, all right. All right. Typo. I have a typo. Okay, sorry about that. I'll have to look at it. All right, so let's go further here. So you can see here, this is a 27 VIX, okay, and you can see quite a bit of difference here from what we did on the 22 VIX, right? So much further away, okay, and I've traded in all of these types of markets, and it's the same thing, okay, it's just the same thing. So again, the probability of these types of trades, even if you take losses on them, eventually it'll come through. And I'll show you the positions. Okay, so here is a 27 VIX, and you can see that these positions now, this one here, let me see, is this 1 DTE? Yeah. So if you look at the 1 DTE and 27, let me go back here, and 0 DTE and 27. Let's just see this one right here on 15, 3.61. It's actually less. And so when you're when you're trading 1 DTE, 0 DTE, this should be higher, okay, but it isn't, and it's because of the implied volatility when you're putting that on, okay, and that's what implied volatility does to you. Okay, all right, so let's go into threatened trades, and these trades I documented, okay, and how they worked out over time. It's a while back. It just took me a long time to do this, but the process and how the market works is exactly the same way. Okay, for many years. All right. So in this case here, we have a 35.75, 35.65 put, and we have a 10 wide position. And now this is a threatened trade, okay? It's at 245 now, because the position, the market price when we put it on was 35.80. Now it's 35.75, okay? For that position. So so what happens if you want to roll that trade one day? You'll get a $1.75 credit, for that position as a credit, okay? Just keeping it the same way. So now let's go to bear spread, okay? For bear spread, you can see that the same position, same type of position, right? You roll it, you only get $1.15, okay, compared to the other one that we had. Let me see. Yeah, compared to 175, so it's 115, and so that's that's how the market works, okay, because it's always closer on the call side than it is on the put side, right? Now this is a bull spread. Rolled down next day. So we rolled this position down, and you want it, I was looking for a position so that I can get a credit for taking that position down. So I wanted to keep a credit there, right? And so you can see we went 25 points down and got a 35-cent credit. Okay, so now here we did it with the bear spread, and you can see that here we got a 30-cent credit, and it was only 15 points away of the market. Okay, so there's a big difference between bull spreads and bear spreads, when you're doing 0 DTE. So now here we have we rolled it to the following day, okay. And we pushed it down, and now you have a widened spread here, right? So it went from 10 wide to 15 wide, and you can see the big difference here in what occurred. So you got now 45 points on that position with a 15-cent credit. Okay, so now we have a bear spread roll down and widen the next day. And again, you get 25 cents on this, and instead of what you got on the put spread, and you get a 35-cent credit. Okay, and again, I'm going to answer all your questions, so hang in there. All right, so bull spread, same strikes, 2 days out now. Now we're going 2 days out. and you can see here we got a $2.15 credit. Not a lot. It gives you, it gives you a 40 cent higher credit for that position. A little bit more. Okay, here's a bull spread widened 2 days, and again, this is widened, and you have a 2 days out, gives you 60 points for 35 cents. If you widen it 2 days here, it'll give you 5 points, and you get 100 SPX points for pushing that down and widening that spread. So you get 100 points, quite a bit, when you're doing this. All right, now we're looking at in the money position. So now you're threatened, and you're above, right? You're above the threshold here. So you're definitely threatened, and the only thing that you can get here is a debit when you try to roll that trade for the same amount of. So right there, you're losing money basically. Okay, bull spread, same strikes next day, and threatened again. And so here's on the put side, you get $3.30 on this guy. So very expensive to roll. So you want to roll, if you're going to roll it, you want to roll it when it's not in the money. Okay, here's another one. 35.90, 35.80. Widen the spread. Got a 0 for that. So it only gives you 15 points of downside for that. Okay. Okay, bull spread 1 week out. Okay, so moving the position 1 week out. In this case here, we rolled it down to get a credit on this, and the best way to manage this is to so if the put is in, you want to put on a call spread to give you additional fund for managing it. Okay, it doesn't cost you anything in terms of margin, and it's the best way to trade it, to move a trade out 1 week, and it gives you a lot of distance to manage that. Okay. All right. Let's see here. So we have a bull spread, rolled down, widened 1 week with widened, it's a widened position. You get a 15-cent roll on here. And again, it'll give you a better distance and move it out quite a bit. Okay. All right. So let me show you some real examples for what we did here. So here we put on a trade. We put on the call spread and the put spread. You can see that the market went quite a ways down. And so what we did was we rolled it by widening the spread. Okay, we collected a 40-cent credit here. And then the next day, basically the position expired worthless. Okay, and so you got a dollar for that position. Okay, here's another example. Put on a call spread and a put spread, and you can see here these are 15. No, these are 10 wides actually. Yeah, they're 10 wides. And here, when the market went down in that area, we did a roll on it, widened it, and collected 30 cents on it. All right. And so here's 0DTE typical adjustments. So original trade, 60 cent premium. We did that roll. We got 30 cents. We put on a put spread on it. I'm sorry, we put on a new position on it. And then we rolled that position, collected 15 cents. And then we put on a new position for the put spread, $1.05, and then rolled the spread and collected 25 cents. So the new position got $1.30, and basically overall we closed the position at 10 cents. Total credit was $1.20. So even when you have a threatened trade, you can actually gain additional premium, by putting on, by widening the spreads and moving the position. Okay. All right. So here is my actual performance. Okay. There was a gap between November and March where we're still, working on that, because I moved from Thinkorswim to Tasty Trade, and we're getting through that. But you can see here that the consistency is just phenomenal. It's just really, really good over time. Remember, these are every month. Okay, so there are losses in there. Okay, and but overall, this is the best, best way to manage these trades. All right, so I'm going to show you the inside a little bit of what we do. Let me take you back in there real quick. Hold on. Okay. All right. So here is a trade. Hopefully you can see that. Okay. So these positions here were put on today, and you can see the timestamp is 9:30 for the first position that I put on, which is the call spread, and then the put spread I put on at 9:33. Okay. At this point right now, unless the market goes really high or really low, these positions are going to expire. Okay, the positions above here, July 8th, and these positions also expired worthless. Here, there's other positions that came in. Okay, here was a stop loss position right here, the call. I closed it at $1.80. But the put side came out fine. Here I put on a call spread just because I had another. Let me see here. Yeah, I had another position that I was managing on 0DTE. Okay, here's another close on the same, July 1, put on a call spread and a put spread, and these closed again on the 28th. We got a close, expired close on these as well. So you can see here the probabilities, of managing these are phenomenal. They're just phenomenal, and this strategy has worked very, very, very well. Okay, so let me move back here to screen. Okay, and let's keep going here. All right, so the question is, we talked about interested in learning new strategies, desire to see your account grow month after month, find the right strategies that provides consistent trading results. And this is it, guys. You know, it works. It works. And I can tell you that the way, you know, to manage these is very, very, very consistent. Okay. All right. So how do you break these barriers? You know, do you want to keep doing what you're doing and hope that one day the you know, everything will stick, or, you know, are you going to finally take the steps to get to the place that it works? Okay. And it's not easy. It's not easy. Okay. There's a process to this. All right. So you want to have a no quit attitude, commitment, discipline, and having an edge, and sticking to your rules. Okay. And it gives you success. So we have a newsletter. You can go to simpleoptionstrategies.com. I share my trades after the next day, okay, and you'll be able to see them on a daily basis, and that's what I do. All right. And so, would you like to follow our trades, learn as you earn, okay, and become consistent? And it's the best way to get to where you want to go. Okay. So we have a trade alert service. You know, a lot of guys come in, they usually stay in for around 3 months, 4 months. They learn what they learn, you know, and there's a lot of many other trades and traders that are here, you know, for you. Okay. And these guys trade for a living. We have 3 or 4 guys that actually trade for a living, and this is what they do. All right. And they share what they do. So, you know, the question is, do you want to get to that point? Well, of course you do. You know, so the best thing to do. Oh, we're going back here. Okay, 1 second. Okay, so we have trade alert service that that's basically automated. Okay, for the most part, and we trade, and if you know, we trade options and futures and different types of strategies, and it's a process that you can learn for each of the different strategies that you do. We have 6 or 7 different strategies that we use, and they're great. Okay, so whether you're getting started or successful already, right? This is the best place to get very, you know, a very low expensive way to learn how to trade. Okay, and I'll share that with you. So in our trade alert service, we have one-way communication and two-way communication. So we're constantly getting questions, you know, about, you know, what trades and what we're doing, and then we have the alerts. Okay, so the alerts are pretty static. And again, they come, you know, most of those come from my account, but we have other traders that do different things as well. As an example, Ike is one of our traders, and he's been doing this for I don't know how many years, but he designed a strategy for trading short-term buy rights. Okay. And the portfolio is up, you know, close to 50% in a couple of years. All right, and it's a very conservative way to trade doing that. So with that, we have a lot of you know, trader success stories and what they've done, how much money they've made, and it's just a great way to get there. So I have a guarantee. Subscribe for 1 month and lose money by following my trades, and I will refund the subscription to 125%. Okay, it's based on the first month if you join. Okay, so here are. Let me share with you the costs as of today. $39, $79, and $109. The prices are going to go up in the next launch. Okay, we're going up $20, and so it's a great way to get in now. Okay, so let me share this with you. The offer. So I get this right, and I want to let you know. Okay, the offer's there. Right now, we are in a period where we don't open until August 7th. And the reason we don't do that, we open every 3 months, okay? And the reason we do that is because we want to make sure we focus on the traders. And when new people come in, they ask a lot of questions, okay? And so we have a 2-week window where we get all the answers, all the questions answered, for them. And then we go back to focusing on the traders, and then we close off the the service, okay? And that's the way that we do it. So excuse me. So okay, so let me get through this real quick. Okay, so if this is for you and you want to learn a process to gain income in the market that goes up and down, you want to finally break the series of losses, you want to earn consistent income, this is it. It's a winning strategy. Okay, so what you get access to is $20 off if you subscribe by joining the wait list. Now there's no cost of joining. In the offer there, you can join, and you can decide if you want to join the alert service or not. Okay, but my advice is that you join the wait list so that you're able to get in, and then and then you can decide. All right. So we have professional traders and subscribers chat group that, again, they share their trades for free, and they've been doing this for many years. We have a training and education channel. We have automated signals in seconds of the trade. We trade entry, fill price target after fill. We help you with adjustments on the trades as well. And my guarantee that you'll make money. Okay, it's a winning recipe. All right, so let's look at the okay, questions. Why so quick? Typo. Okay, I'm not sure about those. All right. How do you determine the market direction? Technical analysis. If so, what? Yeah. So with 0DTE, it's a little different than than following a trend. So it's really based on the probability of the trade and the volatility. Okay. For other types of trades, it's different, but with 0DTE, we put this out. We put out these trades the same way every single day, and we let the probability take its course. Okay. Who's Mr. Market the boss? Okay, so let's move on here. Okay, thanks for the webinar. I'm a member. Enjoy Al's platform. Basically, oh, okay. Thanks, guys. Success rate is 85%. Thanks, Nate. Appreciate that. Okay. Swing trader, 0DTE are checked but crossed out. Let me see. Same for 7DTE. Oh, so these are. Yeah, this is why we don't have the service open right now. It's only annual. You can join for annual, but we'll be open on August 7th, and so all of those will be open. Okay. Swing trader 0DTE are checked. Okay, got that. All right, on the following wait list, we'll keep following. Thanks. Concerning your trade results, how many contracts do you trade? Right now I'm trading 2. Normally I trade 4, just because I have I have some widened spreads in there that I'm managing, and so I move down the number there. Okay. When do you decide 0 DTE, 1 DTE, etc.? When it gets threatened. When a trade gets threatened, we look at it, and on the put side, we again we roll the trade, and typically the call side we manage it, or the call side we close it. Okay. All right. I don't see. Okay. Another question. See here. Does $39 a month with annual membership offer credit spreads too? Yes, it's for monthly trades. Still confused because 0 and 7 DTE are both crossed out. Yeah, so they're crossed out right now just because they're not open. The $39 a month should be closed as well. And again, we open the service for new members on August 7th, so 1 month away. Yes, we can upgrade. You can upgrade and downgrade at any time. The biggest concern trading 0 DTE is risk reward ratio. Yes, yeah. You just have to be cognizant of the fact that credit spreads have horrible risk reward metrics. Yeah, the discounter. Yeah, the discounter. You can if you join the wait list, you'll have access to the discounted wait list. I'm sorry, the discounted prices on there. Only times I lose is when, yeah, when you let a trade go, you don't manage it, that kind of thing. Yeah, the $39 a month offer is available. Okay. Any other questions? I think we're good here. Okay, guys. All right. Hopefully this was of value to you. If you didn't get your question answered, just let me know, and you can send me an email. And there will be a replay or recording that you should be able to get. So hopefully, again, this was of value to you, and hope to see you in our trade alert service. All right, guys. Thanks, and we'll see you again.